While certainly gold can respond to geopolitical events, um, by far the driver for gold is the dollar. Um, yes, the yen does appear to drive gold, from time to time, maybe on a tighter correlation on a daily, but over the long term, it's basically the dollar that drives gold. So um, you can see we've got a top in the dollar, and corresponds almost perfectly with a bottom in gold. The dollar has been dropping down into what I believe is probably a 3-year cycle low. There is a scenario where we get a bounce for maybe one or 1.5 daily cycles, and then make a lower low, something that maybe tests the 2016 low. But this intermediate cycle is very, very mature. It's actually about twice as long as a normal intermediate cycle. The daily cycle here in the dollar is very mature at 43 days. Its mirror, the euro, is also very mature at 33 days in its advance. So that they're both due for a trend reversal. I really don't see the dollar. We've already had like 7 daily cycles in this 54-week intermediate cycle, which, like I said, is twice as long as a normal intermediate cycle. So I really doubt that there's going to be another daily cycle here. I think we're going to put in an intermediate cycle low here pretty soon. Probably the 3-year cycle low, although, like I said, there is a scenario where we could get one more short intermediate cycle, kind of to balance out this really long 54-week cycle. We could maybe have a short 12-week cycle that maybe drops again and gives us a final 3-year cycle low. But either way, I think the intermediate cycle here is about to come to an end. We're really deep into these daily cycles for both the euro and the dollar, and you can see this has been pretty clear. Once the dollar topped and started going down, gold bottomed and started going up. The problem now, though, is that the dollar is making lower lows into this ICL, but gold is not making higher highs. So once this trend reverses, and I don't know what the trigger will be, the 61% Fibonacci retracement of this intermediate rally is just slightly below where we were at a couple of days ago. So maybe we get one more drop down and tag that 61% fib. Maybe the GDP report today triggers a rally strong enough to indicate this was a bottom. Maybe we got to wait till the jobs report next Friday. I don't know, but I think we're right on the verge of completing this intermediate cycle decline, and then the rally out of the bottom should be fairly strong. You can see the rally out of this intermediate cycle low was a fairly powerful move. So the same thing should happen once we get this bottom, and then that should trigger gold's move down into its intermediate cycle low. I don't think there is hardly any chance that gold would go below the December low. This cycle has been right translated. Right translated cycles don't usually drop below the previous intermediate cycle low. So I'm going to stress again that the bear market was over back in the winter of 2015. We had our baby bull rally, and now I think gold is in a basing pattern, probably a triangle pattern. And once the currencies reverse, then I think gold gives us a move down to at least test that lower triangle trend line, which is going to be somewhere between 1160 and 1180, but I don't think there's really any shot of gold going below the December low during the coming intermediate cycle low sometime in June.